Welcome to TIP Finance, where I'm joined by Scott Grant, who's a director at London South East. How are you today, Scott?
I'm great, Zach. You?
I'm doing well. Just wondering whether the markets have cooled off or had cooled off a bit over the Easter break. Well, obviously they did on the Friday and the Monday, but was there a sort of a more subdued tone in recent days?
Well, there was, of course, till yesterday. Yesterday we had a really down day. It was looking very miserable for most of the day. Well, I say most of the morning, and then of course Theresa May popped her head out of number 10, and everyone seemed to be a little bit chipper. And certainly the strength of the pound accelerated dramatically. So the markets are getting a little bit busier. I picked a few things for you today, just to basically say what's hot on lse.co.uk. Any prices or figures I relate to are at market close on Tuesday, the 18th of April. The first one I got for you is just from our most traded list. So this is buying and selling via London South East trading. Number 4 on that list was a company I hadn't seen before called BNN Technology. They're actually listed on the London market, but they're a Chinese payment technology company, from what I can see, largely providing services to the Chinese market. They, as I say, were number 4 in our most traded last week. Their share price actually yesterday fell by 11% to 68.25 pence. And now it's actually testing the 52-week low, which came on the 21st of April 2016. I think I can see possibly a good reason for that, in the sense of they released an RNS on the 13th of April, excuse me, which listed a placement of 31 million plus ordinary shares, which raised the company £25 million. So it might have diluted the share price ever so. Obviously, as I say, it's now testing its 52-week lows, but in the sense of raising that much capital, perhaps they've got good times ahead. I haven't researched it too deeply, but just interesting that BNN Technology showed up on our most traded last week.
Okay, and any other exciting situations?
Well, a couple to do with house building and construction and home improvement and stuff like that. This one, I must admit, is a rarity for me. This is one of mine, as it were. This is TEF, or Telford Homes. They're an AIM-listed house builder. I cottoned on to the fact that a wealth manager called SG Capital released a research report on the 29th of March. At that point, the share was trading at 350 pence, or £3.50, and their initial target was £4, 400 pence. Their reasoning behind that is it's only trading on 8 times earnings, and for an AIM-listed company, it gives a 4% dividend, when you won't find that many AIM companies actually providing dividends. So really strong indications there for an AIM company. There's also 2 broker buy ratings that have popped up in 2017, one from Canaccord Genuity and the other from Peel Hunt. I got in, I must admit, a few pence around about the £3.68 mark, and I'm going to reassess again at £4 myself. So no recommendation, just an interesting stock, an AIM stock that could be going places, but as I did, do your own research.
I mean, the shares were, I think, £5 a couple of years back, so still some upside from there. And the company, quite a small one, just about £300 million. So if you don't like the big boys and girls, that may be one to go for.
Absolutely. A couple of little things to finish with, if I may. Just looked at the FTSE 350 yesterday. Top riser was Howden Joinery. They had quite a few trades, over 7,000 trades on that share yesterday, and it went up by 11 pence, which equates to 2.43%. There were over 4 million bought and sold, but perhaps quite interesting, and whether it contributed to the rise in any way. The actual company bought back 37,000 shares for cancellation. So slightly less shares on the market, and Howden had a good day yesterday. Just to end, if I may, with our share views video, a colossal one at the moment, well hosted by your good self. We've got Jim Mellon on there. I think, as I looked a moment ago, it's up to 899 views, which is huge. The topics you covered with Jim were wide ranging, from the US and Trump to the commodities in play, and to the danger of ETFs. And you coined the phrase, I guess now, which I'm using a lot, which is called Japanese oasis theory. So I thought that was a great phrase you came up with there, Zach.
Well, thank you very much, Scott. I'm not quite sure. I can't actually remember saying that, but I'll have to look at the interview again. But Scott Grant, Director at London South East, thank you very much for joining us this morning.
Thanks, Zach.
Thank you.